Cryptocurrency investment has gained significant popularity in recent years, offering individuals a unique opportunity to participate in the digital financial revolution. If you're new to the world of cryptocurrencies and want to learn how to invest, this comprehensive guide will provide you with the necessary knowledge to get started. We'll cover the basics, key considerations, and steps to take for a successful cryptocurrency investment journey. Understanding cryptocurrencies. Cryptocurrencies are digital or virtual currencies that utilize cryptography for secure transactions. Unlike traditional fiat currencies, cryptocurrencies operate on decentralized networks called blockchains. Bitcoin, the first and most well-known cryptocurrency, paved the way for thousands of other digital currencies, including Ethereum, Ripple, and Litecoin. Key considerations for beginners. 1. Research and education. Before diving into cryptocurrency investment, it's crucial to educate yourself about the fundamentals. Understand blockchain technology, how cryptocurrencies work, and the factors that influence their value. 2. Risk assessment. Cryptocurrency investment carries inherent risks. Prices can be highly volatile, and the market is influenced by various factors. Only invest what you can afford to lose and be prepared for potential fluctuations. 3. Diversification. Spreading your investments across different cryptocurrencies can help mitigate risk. Consider investing in established cryptocurrencies like Bitcoin and Ethereum, as well as promising altcoins with solid fundamentals. 4. Security measures. Protect your investments by implementing robust security measures. Use hardware wallets or secure software wallets to store your cryptocurrencies. Enable two-factor authentication and be cautious of phishing attempts or suspicious links. Steps to start cryptocurrency investment. 1. Set up a cryptocurrency wallet. Choose a reliable wallet to store your cryptocurrencies securely. Hardware wallets like Ledger or Trezor are recommended for long-term storage, while software wallets such as Exodus or Trust Wallet are suitable for regular trading. 2. Select a cryptocurrency exchange. Find a reputable cryptocurrency exchange that supports your desired cryptocurrencies. Popular exchanges include Coinbase, Binance, and Kraken. Ensure the exchange has a user-friendly interface and strong security measures. 3. Complete the verification process. Most exchanges require users to complete a verification process to comply with regulations. Provide the necessary identification documents and follow the instructions provided by the exchange. 4. Fund your account. Link your bank account or credit card to the exchange and deposit funds. Ensure you understand the deposit and withdrawal fees associated with your chosen exchange. 5. Research and analyze, before making any investment decisions. 6. Research and analyze, before making any investment decisions. Conduct thorough research on the cryptocurrencies you're interested in. Consider factors such as the project's team, technology, market demand, and potential for growth. Stay updated with the latest news and developments in the cryptocurrency space. 6. Develop an investment strategy. Define your investment goals and risk tolerance. Decide whether you want to focus on long-term investments or engage in short-term trading. Set realistic expectations and establish a strategy that aligns with your financial objectives. 7. Start with small investments. As a beginner, it's advisable to start with small investments. This allows you to gain experience and understand the market dynamics without risking significant capital. Gradually increase your investment amount as you become more comfortable and knowledgeable. 8. Dollar cost averaging. Consider implementing a dollar cost averaging strategy, where you invest a fixed amount at regular intervals, regardless of the cryptocurrency's price. This approach helps mitigate the impact of market volatility and allows you to accumulate assets over time. 9. Stay informed. Cryptocurrency markets are dynamic and can be influenced by various factors. Stay informed about market trends, regulatory changes, and industry developments. Join online communities, follow reputable cryptocurrency influencers, and engage in discussions to expand your knowledge. 10. Monitor and review. Regularly monitor your investments and review their performance. Use tools and platforms that provide real-time market data and portfolio tracking. Adjust your strategy if needed, based on market conditions and your investment goals. 11. Be patient and emotionally resilient. Cryptocurrency markets can experience significant price fluctuations. It's essential to remain patient and avoid making impulsive decisions based on short-term market movements. Embrace a long-term perspective and stay emotionally resilient during market ups and downs. 12. Seek professional advice. If you're uncertain or overwhelmed, consider seeking advice from a qualified financial advisor or cryptocurrency expert. They can provide personalized guidance based on your specific financial situation and investment goals. In conclusion, embarking on a cryptocurrency investment journey as a beginner can be both exciting and challenging. By understanding the basics, conducting thorough research, and implementing a well-defined investment strategy, you can navigate the cryptocurrency market with confidence. Remember to stay informed, be patient, and continuously educate yourself to make informed investment decisions. For more information on cryptocurrency investments and how to get started, please click the link in the description. If you like this video, please give it a thumbs up, comment, like and subscribe. Happy investing!